So we've spoken about currencies, we've spoken about exchange rate, we've spoken about major, minor, exotic currency pairs, and all of that good stuff when it comes to the basics of forex trading. But on this video today, we're going to be talking about the different ways to trade forex, because as a forex trader, you also have to know the different ways in which forex is being traded and the best way you can be able to trade forex. So on today's video, on our table of content, we're going to be covering what is currency options or binary options. So what do you understand by currency options or binary options? We shall cover it. Why binary option is very, very bad. Why you shouldn't try binary option, because that is a mistake many people do. Even I myself, when I started forex trading some years back, what I started trading was binary options because I didn't know. So I made that mistake of going into forex and I was trading binary option thinking I was actually trading forex. So we shall talk about how binary option is very bad. We shall talk about what is currency ETFs. We shall talk about retail forex trading, the retail industry, which is something which we encourage everybody to do. We shall talk about the retail forex industry, and then which way should you trade forex. We shall also talk about which way you should trade forex. So by the end of the day, you should be able to have a knowledge about all of these points. All right. So let's see. So currency options or binary option. What do you understand by a currency option or a binary options? Let me just give you a general explanation of options. If you are trading stocks, or if you are trading indices, or you are trading commodities or anything, and if you are trading in terms of options, it means you buy that particular asset at a particular price with a predetermined level or a predetermined future price that you want that particular asset to expire. It's the same thing in forex. So in forex, let me just take this chart for an example. This is I actually took this screenshot from my IQ options. There's a broker known as IQ options. They deal preliminary with binary option. So I actually took this chart from them. So the same thing, the way binary option is done in forex. Let's just assume the current market price is somewhere here. All right. Let's just assume the current market price is somewhere here. And you choose a time frame. You use a time frame normally like you use on MT4 and anything. You choose a particular time frame and you predict that, okay, let's just assume you choose 5 minutes. You predict that before the end of 5 minutes, this price is going to go up. All right. So you predict that before the end, that means before the end of a 5 minute period, this price is going to move from this particular level. It's going to go up. And when you predict, what you do is, instead of trading in terms of volume, instead of trading in terms of lot size, what you do is you put a dollar amount. You put a dollar amount instead, and your gain is in terms of percent. They pay you in terms of a percent of that particular dollar amount, and there is never going to be a day where they will pay you more than 100% of that particular dollar amount. So let's just assume, you can see this particular day I was having about 26 pound on my account, and what I used to do is I used to bet $1 on each trade. And when you bet $1 on each trade and you predict that by the end of that time frame, normally I used to trade 1 minute time frame and the 5 minute time frame. If you predict that by the end of 5 minutes, this chart is going to go up and you bet $1, what they pay you is in terms of percentage. So you see how binary option is very, very bad for a beginner or even as an advanced trader. There's no way you're going to make money from this. All right. So they pay you in terms of percent. They pay you in terms of a percentage of what you have invested. So this day I was actually winning this trade. I took this screenshot. You can see this is a live account. So this currency pair was USD Japanese yen. And I predicted it was a 1 minute time frame, and I predicted that by the end of that 1 minute, the price was going to be higher. So let's just assume the exchange rate here is 1.2456, and I was just predicting that by the end, even by the end of 1 minute, even if the price just goes up by just 1 pip, from 1.2 to 1.2457, even if it just go up by 1 tick, you still win the trade. You win the trade, right? So it doesn't matter even if it goes up by 1 tick, you will still win the 65%, because here you can see the percentage. The percentage that they were paying for that particular trade was 65%. That is very, very low. It's 65%. So if by the end of 1 minute, that chart was a little bit up, the price was higher than the predetermined, was higher than the current market price, because you can see, this is the current market price here. This is the current market price. So I was predicting here. So if by the end of 1 minute, that price was just up by even just one tick, I will have 65%, and I did had 65%. 65% of $1 is $0.6. That's why you see my balance here on this particular trade was 1.65 pound. All right. So that's binary option. That's how binary option is done. And even if this particular chart by the end of 1 minute, instead of it just going up a bit, it keep on going. It went up for even 100 pips, or it went up for even 200 pips. You will still gain the same 65%. All right. So you see how binary option is more like gambling, because I've just explained to you. So even if by the end of 1 minute, or by the end of 5 minutes, or by the end of 10 minutes, or whatsoever time frame you are using, the chart keeps on going for even 200 pips, you make the same percent. You make the same 65%. So binary option, literally, when you are trading binary option, you are trading with let me say you are trading with automatically a risk to reward. You are trading with a risk to reward of 1:0.65. Do you see this? So automatically, when you are trading forex, you know what they call risk to reward, right? Risk. You know what they call risk to reward. Okay, so if you are trading, once you are trading binary options, automatically you are trading with a risk to reward of 1:0.65. So you see, this is not even the kind of trading you should even think of as a beginner, or even as a pro trader. You won't make that money. You won't make those millions you are thinking about from trading binary options. Because for me, it shows that your accuracy, when you are trading with a system like this, in place, it means even right from the beginning, right from the first day you deposit, right? From the first day you go to the bank and you deposit your money. Right from the first day you deposit your money into your broker, they already consider that money as money which you've already lose, because there's no way you make money with this system. It means for you to be able to make money with this system, your accuracy must be greater than 50%. All right, it means your accuracy must be greater than 50%. It means if you place 10 trades, you must win at least 6 of those trades. But now let's compare now binary options and forex, and you see the difference. Let me bring up this slide. So the difference now between binary options and forex. Let me cancel this. Okay, good. So here we spoke about the first difference between binary options and forex and retail forex trading. The main difference between binary options and retail forex trading is that with binary options you have a predetermined. Before you place the trade, you have a predetermined profit that you can make on that particular trade. And in this case, if I'm risking $1, the predetermined profit that I can make on this trade is $0.6 or is 65 cents. All right. So if I'm risking $1 on this trade, the predetermined profit that I can make on this trade is 65 cents. No matter what, no matter how long the market go, no matter how far the market go, the highest I will make on this trade will be 65 cents. But in forex, which is in retail forex, which is something which I should advise everybody to do, if you place your trade here and you are predicting that the market will go up by the end of that time frame, let's just assume we are using 1 minute or we are using 5 minutes. You predict that by the end of 5 minutes, the market will go up. If by the end of 5 minutes, the market has gone up by, let's say, 10 pips, the market has gone up by, say, 10 pips, you'll be paid in terms of those pips. And let's just assume now in forex you have what we call leverage. You are able to leverage your account. Maybe your broker has given you a leverage of 1:500. And it means if you have a leverage of 1:500, everything in your account has been multiplied by 500. All right. If you have $1,000 account, your $1,000 account has been multiplied by 500. You'll be trading like somebody who is having a $500,000 account. So if your money has actually been multiplied by 500, it means that if the market moves up by 10 pips, instead of you having this 65% gain, which is already predetermined in binary option, you will be having about, you risk $1 and you'll be having about $4. All right, you'll be having about plus $4 in that particular trade, and this does not even end here. This does not even end here. If the market keeps going up, you have the ability to keep managing your trade. You can keep moving your stop loss up. You keep trailing, you keep using what we call trailing stops. You keep using trailing stops, and by the end of the day, you can actually risk $1. All right, you can actually risk $1, and you end up having $10. This is very possible in Forex. This is very, very, very possible in Forex. For you to have a risk to reward of 1:10. This is very, very feasible in Forex. I've done this many times in Forex, and there is no way you can achieve that with binary options. There is just totally no way. There is no way you can even achieve a 1:1 risk to reward in binary option. There's no way you can even achieve a 1:1 risk to reward, because the system from the on-go is already designed for you to lose your money. So you already see how amazing retail Forex is. So when you are starting in Forex trading, please just stay away from binary. Even if the binary option people, the main reason why I even signed up for binary option when I just started was because of their marketing. They are very good in marketing, because they know that many people don't want to trade binary options. They will market it to you. Anything that you see, any particular side of trading which you see is having the higher degree of marketing, I'll advise you to stay away from that particular fee, because that's the only way they get their clients. They have that particular circle. They have that particular circle that, okay, when new clients come in today, by the end of 90 days, which is called the 90-90-90 rule, 90% of all Forex traders blow 90% of their account in the first 90 days of trading. So they already know that rule. So new traders will come in here. By the end of 90 days, they will blow their accounts. For the broker to keep making money, they will keep advertising, so that new traders come in again at this particular point. By the end of 90 days, they blow up the account at this particular point. They do advertisement. So they do that by the end of so the circle, you can see, the circle keep going, so they have to do advertisement. They have to do advert all the times to keep on bringing new people, because the system is not sustainable. All right, the system is not sustainable. There's nobody who will make money in binary option a longer period of time to keep trading. The system is not sustainable. So they have to do that marketing. They have to do that marketing as much as possible to keep people trading with them. So we've spoken about the predetermined price, the differences between binary options and Forex trading. We've spoken about the predetermined price, which in binary options, by the time you place your trade, you have a predetermined price. In Forex, the profits that you can make in retail Forex are unlimited. The profits are unlimited. When you go to your MT4, you can set your take profit the way you want. You can use your stop loss. Here, there's no stop loss. All right. Another difference between binary options and Forex trading, there is no stop loss in binary options. So in binary option, it's either you win or you die. All right. In binary option, it's either you win or you die. It's either you win or your account will be blown out. Because once you already place your trade, that okay, I'm buying here, I'm predicting that by the end of 1 minute, this chart should go up or down. If by the end of 1 minute, this chart just go down by just a pip, you still lost that particular $1 you have invested. But with Forex, if you are predicting that, if you buy, and you're predicting that by the end of 1 minute, this chart will go up. If by the end of 1 minute, see something, if by the end of 1 minute, that chart didn't even go up, or the price instead went down by 5 pips, There is no way you are still in the game. You won't be stopped out. They won't close your trade. Your trade will still be open. Maybe your stop loss was, because you can see in the market we have like we have lower low, lower highs, lower low, or we have higher highs, higher lows. So maybe your stop loss was somewhere here, and your take profit was somewhere here. You see. So even if by the end of 1 minute your chart is down by maybe minus 5 pips, you won't mind, because at this particular point in time the market always appreciate, depreciate, appreciate, depreciate. It's like you breathing, you exhale and you inhale, exhale and inhale. That's the same thing the market does. Because maybe by this point in time, the market was just somewhere here. All right? But with binary option, you already be out of the trade. Your money, your invested amount will already be gone by then. But with Forex, you can still manage this particular position. It will still produce swing lows and then continue in your direction. And by the end of the day, if you know what we call trade management, you will still come out with a profit. All right? But in binary options, you can't do that. Another big difference between binary options and Forex trading is that in binary options, there is no leverage. So if you invest $1, that $1 is taken automatically from your account. All right? If you invest $1, if you want to open a position of $1, you are actually investing minus $1. All right? There's no leverage. But now in Forex trading, if I'm using a leverage of 1:100 and I want to invest $1 on this particular trade, I'll actually be investing $1 times 100. I'll actually be investing $100 on this particular trade. Do you see how amazing this is? Do you see how wonderful retail Forex trading is? Many people used to start with binary options. They will only discover this when it's already late. So do you see how amazing Forex trading is? So even now, instead of investing like somebody who is having $1, I'm investing like somebody who is having $100 in my account. Even though I invested just $1 of my own money. I invested just $100 of my own money. But that $100 has multiplied by the leverage. By the leverage in my account, which is 100. So even if this chart now has to go up by just 10 pips, that 10 pips now, if I'm trading with a mini lot, there's what they call micro lot and mini lot. If I'm trading with a mini lot, I'll just multiply this by 10. So I'll be ending up with maybe $1,000 profit. You can't make this amount of profit with binary option. There is no way you can make this amount of profit with binary options. So that's just what I wanted to explain to you guys, the differences between binary options and Forex and retail Forex trading, and why you should stay completely away from binary options. So let's talk about why binary options is very, very bad. I already spoke about it, because they say binary options are embarrassingly bad. They are so bad that they have to be marketed. So they have to be marketed all the times. If not, the brokers that actually offer binary options will go out of the business. If they are not marketed all the times, the brokers will go out of the business. Not only that, they are so bad that they use deceptive. So the brokers even use deceptive method. They will tell you that just put $10, they will give you a bonus of $1,000. Or put $100, they will give you a bonus of $300. Those are deceptive means they used to be able to lure you. They used to be able to lure you into that trading system. And when you put your money, they know that you can't get out. It's like a prison. It's either you win or you die in binary option. There's no way you're going to win. So obviously they just know that that money is coming to them like their OTC gain, like their over-the-counter gains, right? So they said not only that, they are so bad that they use deceptive marketing practices and are made out to sound like a get-rich-quick scheme. Simple. They will advertise it to you. That's why I keep telling people every day, Forex trading, retail Forex trading is not a get-rich-quick scheme. Though it is a get-rich-sure scheme, there's a difference between a get-rich-sure scheme and a get-rich-quick scheme. So Forex trading, retail Forex trading is not a get-rich-quick scheme, but for sure it's a get-rich-sure scheme. It has made us rich. It has made us millions. So it is a get-rich-sure scheme, but not a get-rich-quick quick scheme. But now these people will advertise binary options to you as, I don't call names of brokers and stuff, but you guys already know the brokers out there will do binary options. They know very well that I know what they do. That's why even when they come up to me sometimes and they pay me for sponsorships that I should do it, I used to refuse. That no, I can't talk about your services because I know what you guys do. All right? They say it takes a year for people to build a reputation, but it takes a minute to destroy it. So I won't talk about something I don't believe in. So binary option is very bad. So they even use deceptive. They even use deceptive means to be able to advertise it all the times. That's the only way to be able to make money. All right. So let's go to the other slide. So let's talk about currency ETFs. This is another way in which forex trading is still. This is another way in which you can still trade forex, but it's not advisable because for you to be able to trade currency ETFs, you need bigger, like really big, a big account balance, like maybe about $500,000, 1 million and stuff. So this one is mostly traded by banks. And what is an ETF? An ETF is just a basket. It's just a basket of different high-performing currencies which have been weighted to have a particular currency pair. All right, so it's just a basket of high-performing currencies which their exchange rate has been summed up to produce one weighted exchange rate. So let's just assume we have the Great Britain pound, USD, JPY. Then we have a New Zealand dollar. So what they do is they will come and they take these four currency pairs. They take their exchange rate. They take the exchange rate of Great Britain pound, they might call it A. They take the exchange rate of United States dollar, they might call it B. They take the exchange rate of JPY, they might call it C. And they take the exchange rate of New Zealand dollar, and they might call it D. And they multiply it now, they divide it by their average, they divide it by 4. So they add all their exchange rate, they divide it by 4 to have what they can call the weighted exchange rate. So this weighted exchange rate is what they will then predict. So this one becomes, this currency pair now, this exchange rate is more stable. It's more stable than all of these currencies. It's the same like trading indices, because when you hear of the Dow Jones, you hear of Nasdaq. Nasdaq is just a combination of the top 30 tech companies, like technology companies in the United States. So since different companies have different stock prices, for them to have a more stable stock price, they do what they produce what they call an index. So they will add up 30 different companies. It's just a quick recap of how you hear of Nasdaq. So what they do is they take 30 different Facebook, Amazon, Google. So they add their share prices of 30 different companies and they divide by 30 to have one particular stock price, which is known as the index price. That's why I used to hear people say, okay, do you trade indices? I also trade indices. That's why I have an idea of that. So that's an ETF. A currency ETF is the same. It's the same as an index. It's the same as an index. All right. So a currency EFT is the same as an index, because they join the prices of different currencies to be able to come up with one more stable exchange rate. Because all these exchange rate, their exchange rate are not too stable. But when they add their exchange rate and they divide by 4, it gives them a more exchange rate. With this one now, banks can easily predict, they can easily do the analysis, they can easily place bigger amounts and stuff like that. So like here, you can see most of these currencies we have here. Okay. You can see most of these currencies we have here, like the links, the fuel, brokered and stuff. They are all weighted exchange rate. They call them weighted exchange rate. With them, they have more stable prices. All right, they have more stable prices, and banks can easily invest in them. So that is another way in which people also trade forex. Okay, so let's go to the answer. Say retail forex trading. I already explained to you guys the meaning of retail forex trading. So retail forex trading is what I do every day. Any day you come to my channel and you see me talking about forex, You see me explaining to you guys how to trade, how to make money, and you see me withdrawing. I actually trade. I'm actually a retail forex trader. Though I was trained as an institutional forex trader. When I was trained, I used to trade for banks because that's how I was trained. But after my training, the main system where you see 99% of traders is where they call the retail forex industry. All right. And what does the retail forex industry stands for? The retail forex industry is just a situation where you trade forex through a forex provider. All right. A forex provider is also known as the sub liquidity provider, because they actually take the quote, they actually take the currency prices. For example, if you are trading the Great Britain pound USD, your broker will go to the liquidity provider. The liquidity provider can be the big banks, the Wells Fargo, the Bank of America, and stuff like that. So they will go. So your broker, let's just assume we are using IC Market. All right. So when you go to IC Market and you sign up your account as a retail forex trader, what they do is they will take those quote. They will take your quote directly from the liquidity providers and they provide it to you. If the difference in the quote that they are taking from the liquidity provider is if the spread is 0.1, what IC Market will do is they will also add their own spread, because remember they make money through spread. So they will add their own spread of 0.12 and the price they will give you 0.1 and the price they will give you will be 0.2. All right. So if you open your broker, if you open your account at any point in time and you see the spread 0.2, it means your broker has taken those quote, has taken those exchange rate prices from liquidity providers, and then it's just like retail, it's just like a retail shop where the broker goes and buy different currencies and then come and retail it to you. That's why they call it the retail forex industry. They take those quotes from liquidity providers, then they add their own commission, they add their own spread. Then they give you the general spread. Anytime you place buy or sell, you automatically pay this spread. Inside this spread, they already have the value where they're paying the liquidity providers, and they also have a value that is going to their pocket. It's the same like retail forex industry. When you buy something from a supermarket and you want to retail in your shop, before somebody buys, you must have added your profit to that particular commodity where you are selling. So that's what they call the retail forex industry. And I've explained time without number in our previous videos how the retail forex industry is very nice, how you can be able to trade the retail. So if you are just starting in forex trading, the highest thing you should look out should be the retail forex industry. The retail forex industry is the best. That's where I am. That's where the millionaires are. That's where the money is. Okay. So with that being said, on this other side, they say, which way should you trade forex? I already answered the question even before getting into this slide. The best and the most profitable way to trade forex forex market is the retail forex industry. All right, no other way. Retail forex. This is the best way so far. The retail forex. When you are just starting, start with the retail forex, because the advantages of the retail forex, the power of leverage. It has the power of leverage. It has power of leverage. It has ease of entry. The ease of entry for the retail forex industry. You can start your account today. You deposit money into your account and you start trading forex today. So the ease of entry, transactional cost is the transactional cost as opposed to other assets. The transactional cost is very low. Then high profitability margin. High profitability margin. Forgetting about another point, this is the most interesting point that I like. The high profitability margin. The profit margin is unlimited. How do they mean? Okay, the profit margin is what? It's unlimited in the retail forex industry. So with that being said, we've come to the end of this particular video. So on this video, what we've been able to cover, we've covered what is binary options and how and why you should be able to stay away from binary options. We've covered what is currency ETFs, so that even if tomorrow you become that big bang, you know how you can trade the ETFs. We've also talked about the retail forex industry, how amazing the retail forex industry is and how you can trade the retail forex industry. So thank you so much for staying to the end of the video. If you've gotten some value from this video, Please, for YouTube algorithm, so that we can also spread the good news to help other people watch this free course, because this course is totally for free, and this is the 4th video on the course, and by the end you'll be certified as a forex trader. So the only thing you can do as a thank you for this video is just to spread the news, and to spread the news, leave a thumb up on the video. Please leave a thumb up on the video, and if you are watching and you haven't subscribed, please subscribe to the channel. Don't forget, subscribe. Click the link below to subscribe to the channel. Until then,